heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York, this is Bloomberg Technology. Coming up, the Nasdaq 100 plunges into correction territory as the rotation from big tech continues. Plus, we break down the results from tech heavyweights Amazon and Apple, and Intel shares falling by the most since 1982 as the company offers a grim forecast and slashes thousands of jobs. The picture in financial markets is severe this Friday. The focus is the technology sector. This is the Nasdaq 100 over the course of the week. We are on track for our fourth straight week of declines, matching the run that we saw in April of this year. We have entered a technical correction on the Nasdaq 100. In the moment, about 80 names on that index in the red, fewer than 20 in the green. The story is about three names in particular. Let's bring them up. We're going to go into the earnings story with Amazon and Apple with our reporters, and later a detailed look at Intel. Yes, that is a 28% decline. About 15,000 jobs will go. Reduction in CapEx and OpEx. They basically have admitted that they were slow to respond to their reality, that their market's not going well from a top-line perspective. We are going to get deeply into Apple, which is kind of a bright spot. And let's turn to that stock now. We're seeing a return to revenue for the quarter, but Apple not offering much in terms of clues about an upgrade cycle when it comes to the iPhone 16. Bloomberg's Mark Gurman is standing by, and you and I manning the blog last night. A lot of emphasis on Apple Intelligence being a driver for iPhone 16 in the future. I think you and I had some doubts about that, right?
Apple knows that artificial intelligence, Apple Intelligence, as they call their suite of AI services, are the buzzwords that gets Wall Street going, right? For the past several quarters, Apple, even before announcing it, had been teasing its new AI features because it knew the market, it knew Wall Street analysts were wanting this. It knew some consumers were wanting this. And so they focused a great deal of the call yesterday, Tim Cook in particular, as well as basically every analyst who asked the question, talking about Apple Intelligence. In my view, I think that Apple Intelligence, at least this year, is still very nascent, and I don't believe it will, or quite frankly should, drive iPhone upgrades this September. I think that's more of a next September and iPhone 17 cycle thing once all of the features are available and we're a year out from that release when more people are looking to upgrade.
Greater China was a focus where there was a 6% decline in sales, but Apple told us about the impact of FX, and that on a constant currency basis, it would have been a 3% decline. See past that, Mark. What were the product stories for Apple in China?
Well, first of all, there was a time when Apple was growing at such a big rate that they didn't need to get into FX, currency headwinds, or anything like that. They didn't have to contextualize these numbers to explain that they're better than they actually look on paper. But that's one thing. But the other thing to note is that they're doing better in China in the second half of the year so far than they were doing in the first half of the year, according to them. So you're seeing a bit of an acceleration for them. And that is coming at a particularly good time, given that this iPhone upgrade cycle is approaching at the tail end of this quarter. So they're going into that with a bit of momentum. And that's certainly positive news for them. So it's not all bad. I mean, if you look at the quarter in general and you look at the stock market today, it's clear why Apple's in the green and almost everyone else in the Nasdaq 100 is in the red. They beat Wall Street expectations. They grew revenue 5%. They returned to revenue growth after declining last quarter, and they beat on analyst forecasts for each of their major product categories plus services. So overall, pretty good day for the company.
Bloomberg's Mark Gurman, Chief Correspondent. Thank you. Amazon has told investors that profits will need to take a back seat in favor of heavy spending on artificial intelligence. Here's CEO Andy Jassy on his bullish view for the new technology.
We remain very bullish on the medium to long-term impact of AI in every business we know and can imagine. The progress may not be one straight line for companies. Generative AI especially is quite iterative, and companies have to build muscle around the best way to solve actual customer problems.
But Wall Street did not like that. Shares down more than 11% in today's trading session, on track for the biggest drop since April of 2022, wiping out about $200 billion in market cap. Let's get analysis with Bloomberg Intelligence analyst Poonam Goyal. You and I were talking in real time after the numbers dropped, right? And I said, where's the CapEx number? We did get one. Your reaction to it?
Yeah, it's higher than we had expected. So they did $30.5 billion in the first half. They expect 2H to be higher. We didn't expect them to continue to invest more, so it is a bit of a shocker. But that said, if you think about Amazon for the longer term, the investments will pay off. The cloud business at $100 billion run rate, going to $200 billion by our estimates, it's going to need the investments. And also for Amazon to play catch up on generative AI, right? They're lagging some of the other peers, so you need to see them step up a little bit at least. We didn't expect it to be in 2H, but nonetheless, it's coming, and we do think it'll position it better for the longer term.
I still focus on the AWS top line number. 19% was better than expectations, and forget the financials. On this program, we hear a lot about how great Bedrock is, about the utilization of the platform for many different things in the world of LLMs and generative AI. Why was that not a convincing enough number?
Well, we had expected mid to high teens, so about 17% going into it. And while 19% was a good number, undoubtedly, the 35% plus profit margin was also great. I think the focus just shifted all on the guidance, and that's where the miss was. So I wouldn't discount that 2Q wasn't good. I think 2Q was very good on AWS especially.
My control room producers are showing index level. I point out that there is a lot of red in the markets, Poonam, and Amazon is a big factor in that. Bloomberg's Poonam Goyal, fantastic analysis. Let's keep the conversation going with Helena Wang, research analyst at Phillips Securities. And I think let's start with Amazon. There's a micro focus on AWS, how much money is being put into investment, and then how much money is coming out in the AI story. What did you make of it, Helena?
Well, I think the hot topic for the last few weeks has been the huge CapEx spend, whether it's justifiable. I mean, Amazon has guided exceptional increase in CapEx since the last quarter. In the first half of 2024, their CapEx was $30.5 billion. They're guiding even higher amount for the second half of the year. Just to put in comparison, their CapEx for the entire year last year was only $40.8 billion. So that is definitely a very significant increase. So like all the other big tech companies, they're selling their story of strong AI growth, very confident in their AI game. They would like to have more capacity than they already have today. And they're claiming that they're seeing strong signals of high future demand. I guess also if you're in the AI race, it's almost impossible for you to stop investing in AI because in a short period, you will be obsolete with no means to catch up. But to investors, it really requires a lot of patience. Everyone is telling the same story of investing in AI, so it's hard to say whether in the short term, whose investment will pay off in the long run.
Helena, just focused on AWS, we've hardly discussed the retail business or even advertising. Did you see anything in those segments of the business that interested you?
For AWS, it has been accelerating nicely and 19% year on year. So what we especially like about AWS is their high operating margin compared to retails, because AWS operating margin is 36% compared to retails, which is only single digit. So AWS right now only contribute to 18% of the total revenue. So we do believe with AWS scaling up so fast, it is going to take up a bigger portion of the entire revenue. So we think the real kicker for Amazon in the future would be the margin expansion brought by AWS.
Let's talk about Apple. I look at the numbers. It was basically a beat across the board apart from China. How much emphasis do you put on that China number?
Well, I would say Apple is saying they still see it already as an improvement compared to the first half of the year, but the numbers are definitely not great. Usually when a particular market is not doing well, Apple will specifically point out it's not really the iPhone, but actually the other product category that drag the sales. But they have not commented like that for this particular time. So we can take it that iPhone is actually part of the reason, or in fact, one major reason for the decline. So domestic competition from local brand is still playing a big part. Apple was giving out huge discount in order to fight the competition. So that will also be another factor that hurts the revenue.
Tim Cook and Luca Maestri got a lot of questions about how Apple Intelligence will impact an upgrade cycle in October probably when the 16 generation comes. Have you done the math on that?
Yes, I did. So iPhone sales still remain pretty muted. They're down 1% year over year for this quarter. If we actually do the math, they're guiding for 5% growth rate in the next quarter. So factor in service sector, which is continually growing double digit, and iPad, which grew pretty well, also double digit in this quarter. So we're probably not going to give so much in the next quarter in terms of iPhone. It's probably going to remain flat or actually perform more poorly. So we're thinking that Apple Intelligence boost for the product cycle that everyone's been waiting for is probably unlikely to be seen in 2024. It's more of a 2025 story.
If the question is, if you have an iPhone 15 or 15 Pro or Pro Max now, do you get the iPhone 16? I think there's a lot more to discuss around that. Helena Wang, research analyst at Philips Securities, thank you so much for your time. Now, coming up on the show, we're going to be joined by Bernstein research analyst Stacey Rasgon to break down Intel's earnings and Intel's story. That's next. This is Bloomberg Technology. Intel shares suffering their biggest drop in more than 40 years. This after the company gave a grim growth forecast and laid out plans to slash around 15,000 jobs, signaling that the chip maker is ill-equipped to compete in the AI era. I want to bring in Stacey Rasgon, senior analyst at Bernstein Research, leading semiconductor coverage. I ask you where you'd like to start, Stacey. Which of the many things announced and the sort of guidance given is the most important factor here?
Yeah, so I mean, the quarter itself, revenues were actually not too bad. It was the gross margins that really killed them. And the guidance was clearly awful. Revenues were bad. I mean, they had a hockey stick in the back half from last quarter. Clearly the back half is not playing out the way they thought. Gross margins are falling into the abyss as they get higher costs on their chips. Clearly they're in a tough spot. I mean, they announced a number of actions to try to salvage, to stop the ship from sinking. They're cutting CapEx. They're cutting OpEx. They actually finally suspended their dividend. They had cut that by 2/3 a year and a half ago. So they've finally suspended it. And they're doubling down on bringing in partners that will co-invest on manufacturing capacity. Recently they sold half their fab in Arizona that they're building to Brookfield, and they just sold half of their fab in Ireland, Fab 34, to Apollo for $11 billion, and they got that cash flow in on the quarter. This was I've used the phrase worst earnings from Intel in my career a number of times over the last year and a half, 2 years, and this one probably takes.
Yeah, this time you mean it.
This is probably the worst I've seen. Yeah.
As Stacey, I had the opportunity to speak to Intel's CFO, Dave Zinsner, when the numbers hit, and we got into missed opportunity, I guess. This is what he said about the data center business. And I'm trying to understand what he meant, but he basically is saying they were overexposed in CPU and I guess therefore by extension underexposed in GPU. We all know the story. Anyone that lives or works in the world of technology knows that all of the investment is going to high performance GPU or AI accelerators. Intel has one, Gaudi. So explain what Dave meant there, please.
Yeah, you bet. So they have been clearly over-indexed. I mean, almost entirely indexed to CPUs. And there's a few things going. Even within CPUs, by the way, they've been losing a tremendous amount of share to their smaller competitor. So that's not been good. And then over the last, as the AI boom has happened, we've had a share of a shift in the spending patterns away from CPUs toward GPUs and other types of accelerators. And by the way, there's a broader question there. You could argue, is that a cyclical trend or is that a structural trend? In 5 years, is the data center CPU TAM bigger or smaller than it is today? And you could legitimately argue that it's smaller. So I mean, that's the issue. And the problem with Intel on that front is they don't really have that much of an AI or an accelerator play. They have a product that's called Gaudi. They said that they're going to sell $500 million worth of what's called Gaudi 3 this year. I mean, it's effectively a rounding error, right? I mean, AMD said they're going to do $4.5 billion in data center revenues, and I think people think they're going to do more than that. And NVIDIA data centers, they might be $100 billion this year. And the 500 million doesn't make up anywhere near, like the air pocket that's happened both as they've lost share in CPUs and as that spending has shifted. And so that's kind of the problem. And frankly, Gaudi at this point is baked. Like that product is shipping. Like it's very clear the general demand for it relative to everything else is very, very minimal. Like it's just not enough to close that gap. So they don't really have much of an AI story, unfortunately.
Stacey, just real quick, on cyclical end markets for them and non-cyclical, I mean, the way that the CFO put it to me is that they just hadn't responded to the realities of their revenue, hence the reduction in OPEX, CAPEX and headcount. But there did seem to be some glimmers of hope that coming into the current period and the rest of this calendar year, there were improvements in those markets?
Yes and no. So I think PCs in general are better than they were. Remember, though, they don't sell PCs, they sell CPUs, right? And they talked about there's inventory that's digesting in the back half, which is helping to impair, it's impairing some of the revenue. Now, this is something that I've been worried about. We track the CPU channel pretty religiously, and you get overshipment, you get undershipment, and I've been concerned that at least in Q4 and Q1, I think there was a fairly significant amount of overshipment of CPUs relative to PCs, and I think they're paying for that now. So you have some cyclical downside there. I think on the data center server side, there's been some green shoots that hopefully demand is getting better, again, off of some awful years. But again, people now having like recession worries and everything else, and again, they're still losing share. The data center Gaudi lift isn't really enough. And then some of their other businesses, they have an FPGA business called Altera. And all the FPGA companies, it's the same thing. They're working off a ton of inventory, and that's not really getting better yet. They still consolidate Mobileye. They own most of that company's own. Mobileye reported yesterday morning. We don't cover Mobileye, but just factually, they slashed their guidance for the rest of the year, and so a bunch of revenue had to come out from there. It's just not great. And part of it, I think, is their own doing. Last quarter, they had sort of suggested we'd be seeing above seasonal growth in the back half, and it's clearly not happening. The macro's getting worse. And then on the cost side, again, they've got some incremental cost headwinds that are pretty severe that are impacting gross margins and cash and earnings and everything else. So,
Stacey Rasgon, Senior Analyst at Bernstein Research, whether or not that is and will be the worst Intel print of your career, I think you broke the numbers down. Okay, very quick. We have 10 seconds.
10 seconds. The silver lining, the cash that they're saving from the cost cuts and the dividend suspension and the CapEx cuts, and then all of the money they're bringing in, they'll live. I don't know what kind of a life it'll be. They'll live. That's probably $40 billion of incremental cash over the next couple of years. So they'll live. But what kind of a life it's going to be? I think that is the question that we're all wrestling with right now.
Stacey Rasgon, Bernstein Research. Terrific. Thank you very much. There are some positive earnings prints to talk about. Cloud communications company Twilio reporting earnings after the closing bell Thursday. CEO Cosmo Shivchanda joins us for more from San Francisco. A big focus on growth that's coming in the second half, growth that is kind of evidence now. But this is the first time you and I have been able to speak since you've been CEO. So what have you done to change that growth trajectory?
Yeah, thanks for having me. I would say, we're just running the company with a lot more discipline, a lot more operating rigor. And as it relates to growth in particular, I think we've been very focused on some of the innovation bets that we've been making. And I think perhaps most encouragingly, we're starting to see some real signs that this combination of communications, which we're the leader in, contextual data, which we're also the leader in, plus AI, that combination to drive really personalized experiences for consumers vis-a-vis the customers we support is starting to get some traction.
There's been a lot of emphasis as well on sort of reorganization. What does the company Twilio look like now under the changes you've made, Cosima?
Look, I think the company organization is in pretty good shape, actually. About a year or so ago, we took steps to, kind of get our cost base in shape. But on the flip side, we also wanted to be really focused in the areas in which we wanted to grow. And so we have a communications business that we established at that time as kind of a proper business unit. We did the same thing with our segment business, establishing that with a proper business unit. They've got kind of an aligned set of metrics. And I think the benefit of that is that it also allows for a certain level of disclosure that investors were also asking for.
Cosima, it is important to note that where we are today is in part the result of activist investor interest in the company. You know, you seem to have responded to that positively, taken action. Would you just update the audience that's familiar with Twilio where we stand, please?
Yeah, I just think fundamentally, like, we're trying to run the company well, right? I mean, I think that's something that every single one of our share owners want. It starts with financial discipline, you know, being smart about the bets that we're making, obviously re-accelerating top-line growth over time. We see positive signs about our ability to do that. We're more optimistic about that. I think operating rigor, just kind of the internal mechanics of the company, like doing that well, delivering on the things that we said we would do and actually, you know, going and doing those things. And then I think when it comes to innovation, just being really focused, you know, so we're taking a handful of bets. As I mentioned, one of those is really around this notion of contextual data, using that as a means to combine it with communications to drive interactions on the other side. Like, you know, we serve customers ultimately, and customers keep telling us that's what they want, and I think that's ultimately what's going to yield the success of the company, as well as for our share owners.
Well, contextual data, but when we talk about AI in Twilio, a lot of it plays on what you're good at. Right? Voice intelligence, verify those products. Have you seen an AI-driven acceleration, or are you just saying, we've been doing this a while, guys?
I think it's kind of early days, to be honest with you, but you know, the nature of it is sort of in the product vernacular that you just referred to, right? So voice intelligence, right? I mean, it's a little bit different than from where we were, let's say, a few years ago. Like, actually what's taking place inside these calls now is the ability to harvest some of the data, always with consumer consent, I might add, but harvest the data inside those interactions to pick up keywords, feed that back into an AI engine such that that information can be used to both make that particular conversation more interesting, more engaging for one of the consumers that our customers are engaging with, as well as at the same time taking that data and feeding it back in so that over time that results in a more delightful customer engagement.
Cosima Shipchandler, CEO of Twilio, whose stock's up 5% on a day when tech is down big. Welcome back to Bloomberg Technology. Ed Ludlow in New York City. Let's get a check-in on the markets. Big tech is under pressure yet again, with Intel and Amazon leading the way lower. Their disappointing results pushing the Nasdaq 100 into correction territory. That means falling more than 10% since hitting a record high just last month. But a different story for Apple this morning. It's in the green, despite some disappointing numbers, particularly out of China. Now, analysts and investors alike are applauding the company's return to revenue growth, emerging from a sales slump with 5% growth year over year. There are a lot of product stories within that. Joining us for more, Deepwater Asset Management Managing Partner, Gene Monster. And Gene, at the heart of your thesis is the debate around the Osborne effect. And any technology or consumer electronics fan will always think about Apple and the iPhone in that way. But why? And what is the conclusion you've drawn?
Well, Ed, maybe taking a step back, the Osborne effect is a phenomenon that I'm sure any Apple user and any tech user is familiar with, but they may not know that, but defined as such. And that's this concept of if there is a pending big product coming, it's likely that you hold off on buying the existing product. Now, every year there's a slight Osborne effect, but the more anticipation there is for a next version of an iPhone, the greater the Osborne effect. And so I, in my years of covering Apple, have seen quarters where they have guided down before a major product cycle. In the case of their guidance for September, they guided for similar revenue growth, 5% for the September quarter as they just reported in June. And so effectively, they are bucking the Osborne effect in front of what is a highly anticipated cycle. And why that's so important is that's a sign that consumers simply can't live without Apple devices. It's that they still, even though it makes sense for them to hold off for just another month or two, they can't do it because they need these phones to continue to basically live their lives. And so I think that this was, even though the guidance was effectively in line for September, I think it really sent a powerful message to investors, the strength of their product line. I think that's why the stock is up today.
Gene, the top thing here is Apple Intelligence and the impact it will or won't have. Several analysts had multiple stabs at getting Tim Cook and Luca Maestri, the CFO, to talk about the direct impact of Apple Intelligence on an upgrade cycle. I think Tim Cook went the furthest maybe in saying that there will be a meaningful cycle, but no sort of data. What did you make of that?
And he added that they just don't know until they know, and I think he was being reasonable. I think what I make of it is I think it's a kind of a responsible, judicious response from him. At the end of the day, it comes down to, I think, going forward here, you take his comments and you kind of set them aside, and you have to ask yourself a very basic question. Do you think that these features, basically embedding generative AI throughout many, if not all features of the iPhone, do you think that they are going to get people excited enough that they upgrade more often and they kind of create this super cycle for the next couple of years? And while we don't have the confirmation from management on that, I think that is the central question. Just one other piece to add, Ed, that you alluded to, is that there is these features are going to come out over the next year. And so it's not going to be this kind of aha moment on the end of September. It's going to be where people will get the new phones, they'll get a feature, they'll get another feature. And I think collectively in fiscal 25, we're going to see momentum around this cycle build, but it will not be a rocket ship type of a takeoff. It's going to be more of something that's going to build momentum over the next year.
In China, there has been much made, Gene, of the third-party data. If I've learned a lesson, it's probably be cautious about the third-party data because sometimes Apple executives then prove you wrong. But it has been hard to gauge the iPhone's performance against some of the domestic handset makers. Did you learn anything about that market from the call? And indeed, when we spoke to the CFO, Luca Maestri, on the phone, Bloomberg's Emily Chang did that one, he's saying that the underlying demand is better than it's previously been in China.
That Luca's comments, Tim's comments were that this is the most fierce competitive environment of anywhere in the world, and they're seeing a macro piece to it too. And so if I can interpret or translate Luca's comments kind of going forward here, is that essentially China's been tough. It's been down for 3 consecutive quarters, down 7%, last quarter down 8%, down 13% in December. The good news is, and maybe this kind of gets to Luca's point, he's probably looking forward at these comps. And the comps start to get really easy in September and even easier in December. And so the probability that China returns to growth is high going forward. So I think that is a little bit of a relief. We kind of got through what is the trough, I think, ultimately of China. And just to put some perspective of how much that can impact the business is if you would exclude China from the overall business, so just look at the other 82% of their business, it grew about 7% in the quarter. As you mentioned, their overall business grew at 5%. That was reported globally. And so China has a big weight on it. It has been a weight. I think that this will convert to a tailwind in the September or highly likely the December quarter.
How important were services, Gene, particularly to the bottom line, which is where I was looking?
Another nice surprise is that a few quarters ago, services growth dipped to just under 11%. It was 14% in the June quarter. They guided to just over 13% growth for the September quarter. And that's all in the face of what's gone on in terms of this talk of regulation. There has been some more substance to regulation in Europe, and they highlighted that the Europe App Store accounts for about 7% of total App Store revenue, which translates to about less than 1% of overall revenue. But the point is that despite these changes, these headwinds, this concern, this anxiety around investors over the past year, that somehow the services segment is going to slow, it just continues year in, year out. I think it's testimony to just the flywheel of their products, the ecosystem, them continuing to add. And that services number next year should get a nice boost with this OpenAI arrangement. They will likely charge for a premium version of ChatGPT next year, $20 a month. Apple's going to take their cut on that. I think that is going to continue to put the services segment in kind of this mid-teens growth for through end of 25 or 26.
Deepwater Asset Management Managing Partner Gene Munster, the Osborne effect. That's what it's all about. Thank you very much. Another name that we're tracking is Snap. Snap shares falling today after revenue for the quarter missed estimates. And as the social media company's forecast disappointed amid weakness, particularly in brand spending. Joining us now is eMarketer Principal Analyst Jasmine Emberg. You just go back to the original business, the advertising-based business, and where they did well and where they didn't. What was your conclusion?
Well, it does feel like a big step back for Snap, given all of the work that it's been doing in overhauling its ad business. There were some positive signs. In the report, we saw growth in the number of active advertisers. We saw that it was successfully able to diversify its revenue streams with Snapchat Plus now bringing in over $100 million in revenue. And there were some improvements in its direct response advertising business, which is, of course, what it's been really focused on fixing and improving. The fact that brand advertising, though, is still so much of a headwind for Snap tells me that there is a lot more work to do within its direct response advertising business, both to get more advertisers on board and to get them to commit more budget to the app.
Just looking at the stock, down almost 25%. That does put it on track for its biggest drop since February, and a number of analysts cut their price targets on it. We have to kind of frame Snap in, I guess, the context of competition with Meta, Jasmine. Is that fair to do, and what would we learn if we did that?
Yeah, I mean, I was actually just having this conversation yesterday about whether it's still fair to compare Snap to Meta, because they really are playing in very different leagues. And one of the reasons we saw investors reward Meta, despite all of that AI spending and metaverse spending that it continues to push, is because it has this massive ad business and it was able to show a lot of improvement there. Snap is a much smaller ad player, and it has struggled to keep up, and it's still working to catch up with Meta, and so it really needs to be focusing on that. Now, it's not small by any means. We also heard that 850 million monthly active users was the number of users on the app now, so I think a lot of times it's framed as being the small player, but certainly isn't. But in terms of scale, definitely still smaller than Meta.
Jasmine Emberger, V-Marketer, great to have you back here on Bloomberg Technology. Thank you very much. Now, coming up, we continue earnings discussions, and we're joined by Ravi Inakonda, CFO of DoorDash, to discuss his company's earnings, which were released after the bell Thursday as well. And again, a rare bright spot in what's a pretty big day of red on the screen for markets this Friday. That conversation's next. This is Bloomberg Technology. Back to earnings, DoorDash, which reported Thursday after the closing bell. Strong outlook, particularly on the bottom line for the fiscal third. CFO Ravi Inakonda joins us now for more. I'm going to do something a bit different here, Ravi. We know the numbers. The outlook's good. I actually just want to talk a bit more about the platform and where this growth's going to come from, beyond restaurants, into new product categories, because I think that's a real point of emphasis for a lot of investors this morning. So give me the near and long-term future of how you're going to be driving that growth.
Absolutely. Yesterday, somebody on the media said, we are redefining convenience. That's truly what you are seeing on the platform. We went from being one product in one country to being multiple products in over 30 different countries. We're really excited that more than 20% of our users today look to DoorDash to order their groceries, convenience, retail products, and that was just up from 0% just a few years ago. And we are doing this successfully in over 30 countries where the demand has been overwhelmingly positive.
But Ravi, is it a specific category? You know, I think about the types of things you use an app-based service to get to you conveniently, right? Is it alcohol delivery? Is it cosmetics, beauty, fashion even? What are the areas where you think, okay, we're going to get big on this area?
Grocery has been a large component for us. We have more number of users today ordering grocery than ever before, and they're ordering more times than ever before. And the reason is we've increased the selection. On the East Coast, we've added major brands such as Ahold and Wakeford. The improvement in selection is what you're seeing driving the growth in grocery. At the same time, retail is an exciting part. Consumers are very excited about getting their products instantly when they order beauty products from Sephora or Ulta Beauty, which are other major brands that we've added. Number two, what we're seeing is the strength in new verticals, which is categories outside of restaurants, continues to be strong, not just in the US, but in many of our international markets as well. So you're seeing strength not just in grocery, you're seeing strength in retail, you're seeing strength in beauty, alcohol, many categories, outside of our core restaurants business, while the restaurants business continues to grow quite nicely as well.
I think back to the earlier days of covering Uber and this obsession with adjusted EBIT. There was trust me, there was an obsession. The question for DoorDash is on operational profitability. You've given a pledge before on timeline. What's the latest?
Our financial North Star is driving long-term free cash flow per share. You're seeing the business do really well and continuing to drive free cash flow higher. When I measure and monitor the business, to me, free cash flow is truly the health of the business. And when you look at adjusted EBITDA as well, that's at an all-time high.
Ravi, you and I have discussed the sort of technology side of the business as well. How do you scale by adding merchants, using incentives in a way that doesn't kind of impact maybe the more profitable side of the business on the back-end solution side of things?
The key for us, Ed, is scale is what drives profitability in the business. We have more than 37 million consumers that shop with us every single month. What we see is when we add new categories, the overall engagement on the platform goes up. We are making the app more personalized. When you search for something on DoorDash today, we remember your preferences, and the search results reflect what you preference on DoorDash. All of this ultimately is driving users to come back more often. They spend with us a lot more. We are driving value not just to consumers, but also to merchants. And you're seeing us driving growth for merchants as well. The combination of all this is what's driving ultimately the growth as well as the profitability in the business.
Ravi Anaconda, DoorDash CFO. It's great to catch up, have you back here on Bloomberg Technology. Thank you. There are other news stories. It's time for Talking Tech. And first up, Nintendo profits free fall 71%. The gaming company posted just $365.1 million in profits in the 3 months through June. This as consumers hold off on purchases as they await a new flagship game console that replaces its now aging Switch in its 7th year. Plus, billionaire Jack Ma scores a win as his Ant Group-backed Mint hits a valuation of $5 billion. The fintech company raised new funds as its popular e-wallet service reaches more than 90 million users in the Philippines. That's according to Bloomberg calculations. And Ant Group will own 1/4 of the entity's shares, pricing the value of the stake at $1.2 billion. And embattled short seller Andrew Leff's deleted tweets are in the spotlight. The investors removed his research firm's entire tweet history last year in an effort to fend off what he called class action attorneys and trolls. Now the US Justice Department are digging through those messages, accusing Leff of manipulating the market to benefit his own trading and lying to investigators. Okay, Coinbase CFO Alicia Haas spoke with Bloomberg on Thursday to discuss her company's earnings, noting growth in subscription and services and driving developer creativity on the Base network. Listen to this.
We're really pleased with the growth of subscription and services this quarter, as you note. We grew in every category of subscription and services and reached $599 million, a new all-time high for us. One of our goals has been revenue diversification, and we're pleased to see that mix play out over time. We don't look at when it will cross, Shonali. We look at growth of each of our revenues, diversification of all of our revenue streams. And when I look at our transaction revenue, it does ebb and flow with volatility for spot trading. But what we're pleased to see is continued growth of that other transaction revenue. Base has become one of the biggest contributors to other transaction revenue, and the building blocks are just getting started for lower cost payments. USDC on Base now is free. We're seeing $20 billion of transaction volume of USDC on Base over the last 2 weeks. And so as we think these building blocks come together, we could see diversification of transaction revenue as well. But really pleased with our subscription services performance this quarter, as you noted.
Please double down on that. Base is a relatively new product here for Coinbase. How is that going to start contributing to a greater scale at the bottom line? What exactly are people using on Base that is creating more of a cash flow stream for you?
So just to remind everybody what Base is. Base is a layer 2 solution, which means that it sits on top of Ethereum and it's enabling faster, cheaper transactions. And so that has been our goal, driving faster and cheaper transactions to a mission that we have of 1 second and 1 cent. As I said, over the last 90 days, we saw it come down under a cent for each transaction. And what that led to is 300% transaction growth quarter over quarter. This is enabling developers to build new applications on top of Base that can benefit from embedded payments within that application. And we're seeing all sorts of creativity emerge in this space. We're seeing people build new social networks. We're seeing new types of games. Just creativity is blooming on the Base network. And that's what our focus is right now. Driving that developer activity. Developers will then bring users. Those users will drive transactions, and those transactions will turn into sequencer fees that will bring revenue to our P&L.
How long does it take for that to play out? What are you modeling right now, Alicia?
Well, It's early days. And so what we're pleased to see is that we become the number one layer 2 in terms of contracts posted. So that focus on developer activity is where our energy is right now.
That was Alicia Haas, CFO of Coinbase. Cerebras Systems, a startup making chips optimized for AI, has filed confidentially for an initial public offering. Sources say it's picked Citigroup as the lead bank on its IPO and that it's targeting a listing in the second half of this year. Bloomberg's Amy Orr here with me in New York City. You and I have been tracking this one for a little while with the team. It's interesting. Let's start with the basics of what we know. Timing, who's involved.
So the timing is going to be in early October. So that would kind of like be the group of IPOs that is going to list and go for an offering like after Labor Day. Because right now the IPO kind of window is kind of slightly shut after the July kind of slew of IPOs. And then the next window is going to be September, October, before everything is probably going to slow down because of the election kind of volatility.
Yeah, let's see. It's an interesting decision to make, isn't it? I mean, the reason that Cerebras is interesting as a startup, as a company, beyond the money it's raised and the people already on the cap table, is what it does. You know, it's very on brand for what's in vogue at the moment. What do you make of that? And I guess it's shoppability or saleability in this market.
I think a lot of people have been like talking about AI, especially with the sell down right now, is talking about whether AI actually does produce money, right? But because there's been quite a lot of like AI adjacent plays like Reddit, they were trying to tap into that market. But Cerebras actually is right smack in the middle of it. It produces chips. It makes the largest chip on the market. It's much bigger than the others. If you think about normal chips are the size of a postage stamp, this one is in the size of a dinner plate. So with more memory, with more cores, so technically faster, can handle more data. And then it uses those chips in a supercomputer that will handle a lot of data analysis. Its customers include military, government, and also like pharmaceutical companies in the drug discovery process. So that's like really at the heart, at the core of what people are looking for in terms of AI uses.
Bloomberg's Amy Orr breaking a lot of news recently, but this is one that's been interesting for me to be involved in as well. We have to go back to the markets. This is what it looks like this Friday. Remember, on aggregate, the Nasdaq 100 is headed for its fourth straight weekly decline, matching the run of drops we saw in April, and is technically in correction territory. The big drags, you see them on the screen. Amazon down 9%, Intel down 26%, on track for its biggest drop since 1982. And then bucking that trend is Apple, up 2 percentage points to the upside, where there was a return to growth. There are some big questions about how much money needs to be spent on the infrastructure side to get us to this world where AI is generating meaningfully on the top and bottom line. It's actually been a really wonderful week to be in New York City. That does it for this edition of Bloomberg Technology. Don't forget to recap all the conversations we've had today on the podcast. They were dynamic and there is a lot going on. You know where to find it, on the terminal, the Bloomberg platforms, as well as on Apple, Spotify, and iHeart. So right after the show, I'm jumping on a plane back to San Francisco. I'll see you next week. That does it for this edition of Bloomberg Technology. This is Bloomberg.